Hey, my name's James Nicholson and welcome to my YouTube channel. Now in this video, I want to talk about will interest rates continue to rise in 2023 and what could that possibly mean for us as property investors. So make sure you stick around to the end. I've got some interesting information on this that will really help you make some decisions going forward this year. Now, this channel is all about my investment journey and your investment journey. And I want to invite you along for the ride. We've nearly hit 5,000 subscribers now. We just need a couple hundred more. And so you could really help me by taking that finger of power, smashing that subscribe button over there. Go on, do it now. Smash that subscribe button, hit the bell notification. And while you're there, smash the like button as well, because that will really help me with the YouTube algorithm. So let's talk interest rates. So right now, the base rate with the Bank of England sits at 4.25%. Now, that has gone up rapidly in the last year. And so really, that's the question, is this going to continue? Now, why might it continue? Well, inflation is one of the key factors that has meant that we've had rising interest rates. And so inflation went above 11%, which was the highest for around 40 years. And what you'd normally do with high inflation is you would raise the interest rate higher than the inflation amount, meaning we would have needed to go to 12%. Now, the problem was when we started this, we just got into a period where we had around 2 years where the interest rate was basically nothing. That isn't 1%, that is 0.1%, which is bonkers cheap. Now, that meant that borrowing was super cheap. And that also meant that the prices of houses went up significantly because you could borrow at such a vastly discounted rate. It was absolutely insane. Then obviously we had the pandemic. We also had record money printing by the Bank of England with their quantitative easing program. We had bounce back loans, we had furlough schemes, we have all of this stuff to keep the country going. Then because the world was locked down, we weren't able to get goods from abroad, particularly China. So shipping rates went from $2,000 a container up to around $50,000 at some places, which was absolutely crazy. That was then passed on to us. That made food, drink, energy more expensive. Then we had a war that started in Ukraine. That caused energy problems for us. Everything uses energy. So food costs and all of these things combined basically meant we had some crazy high inflation. So it was, let me just looking at the date here, December of 2021, we went from 0.1% to 0.25% interest rate. Not a big deal, but it is if you're on an interest-only mortgage. That means the payments effectively, if you're on a variable rate, would have doubled, right? Or more. So that's really what's been going on. So we have had 11 back-to-back meetings with the Bank of England where interest rates have risen. Then we had a new government. So it was all going on. All of this stuff is absolutely insane that we've gone through the last few months. Boris was out, Liz Truss was in, Liz Truss did a mini budget. That gave the markets massive uncertainty. The pound tanked against the US dollar. And at one point you were getting nearly $1 to £1, which is crazy. I remember when I was backpacking in 2003, I was getting $2 to £1. I was in Asia, Thailand at the time, and I was getting nearly 80 baht to a pound. Now you roughly get 40. And so that meant that the pound was so weak because of that. The expectations were that the base rate with the Bank of England was going to have to shoot up to 6.5% at that time. So now we've got a little bit more certainty in the market. Things have started to slow down. We were predicted to go into the longest recession that we'd ever had, more than a year. It wasn't expected to be deep. However, we avoided that somehow. And so now, while it might feel we're in a recession, we're not officially in a recession. And so the outlook looks that little bit better. Inflation is expected to drop significantly this quarter. which will then mean there'll be less pressure on the Bank of England to raise rates further. Another thing that they are considering is what's been happening in America. So because the rates have risen, that means that banks struggled with bonds and stuff like that they've got. And two big banks in America, Signature Bank and SVB, went bust or had to get bailouts basically. And that meant that there was a worry in the banking sector. Then Credit Suisse got bailed out by the government. And there was all this stuff going on. Are we going to go back into another 2008? That was a concern for a lot of people. Now, that seems to have died down a little bit now, but there is still some uncertainty. And what that means is that if the central banks, the Bank of England or the Federal Reserve, do keep pushing the rates up significantly faster or higher, then these banks are going to struggle, right? There are going to be more banks that come out of the woodwork that are over leveraged and going to struggle with a higher base rate. And that means there'll be more banking failures. And so it's a tightrope that they're trying to deal with at the moment. What's more important? Is it to get the inflation down? That's what the Bank of England are saying. Or is it to make sure that we don't have any more banking failures and stuff like that? So what we're looking at, and what the Bank of England did say in the last few meetings, are that we're pretty much at the peak right now. So the base rate is at 4.29. However, you can get rates on Money Supermarket. I recommend you go for a broker. You'll be able to get the same rate. But if you look on Money Supermarket, there is a rate with the Mortgage Works, which is one of the biggest lenders. I've got a few mortgages with these guys, at 3.89. So it's less than the actual base rate, meaning that they know rates are going to come down at some point. Bank of England are even talking about potential of rates coming down. They can't say for certain. They can't say, look, in September, we're going to drop the rates. It really depends on inflation. So you're watching this because you're considering investing in property, changing the deal that you're on, and so you want to know what to do. Well, first and foremost, I can't give you advice on that. You've got a different tolerance for risk, each and every person that's watching this. The best option is to speak to a broker. However, some options are to take a deal like this where you can get a fixed rate. This is for only 1 year, that deal. I feel that in a year, rates will be lower. So you think about it. If you took that 3.89, it'll take you 2 or 3 months to get the deal. That gives you till the summer of 2023. So you'll be off of that deal in the summer of 2024. There's a higher probability that rates will be down, inflation will be down, and things will be more certain then, and then you could redo it for a longer period of time. You could fix it 2 years if you wanted a bit longer to give you even more certainty that that will be true, and there are rates still under 4% on a 2-year basis as well. So there are options there. Another thing that some people are doing as well is just going on to a variable rate. This is more risky, and you really want to make sure that you know what you're doing if you do this, but you could go on to a variable rate. Then should the interest rates come down, then you have the option to just move on to a new deal at any time. So you can go on to variable rates where you're not tied in to that deal for a prolonged period of time. So that could give you another option. Now, you need to go out there and do your stuff. I think that rates have peaked because, look, we're seeing 4.25 as a base rate, but the deals that are out there, the banks are telling us they feel that these rates are going to start coming down, or they wouldn't be offering us lower deals than base rates. So let me know your thoughts and opinion on this. What do you think about inflation? Do you think we're going to see some good data on that in the next couple of weeks? Let's hope so, because it's been a long, prolonged period of time now where we've had this high inflation. Do comment below. I love all your comments. Do get involved on the channel. Smash that like button over there, guys. Go and watch this video right here.